Hi, this is James Shug with Westpac London's end of day report for Thursday, May the 9th. Well, another brief report today, not too much economic data to report. We had a small fall of 4,000 in the weekly initial jobless claims number out of the US. That's its lowest in 5 years, 323,000. So more confirmation that the pace of layoffs in the US is in a real downtrend. It doesn't tell us anything about hiring, but at least not as many workers are being sacked. We had figures on mortgage delinquencies in the US at 7.1% of the total stock of mortgages, up. That was in the December quarter. It rose to 7.25% in the first quarter. So a little bit of a rise there, although the downtrend is still in place from over 10% of all mortgages back in 2010. Subprime mortgages were the cause of the slight rise in the latest quarter. The UK industrial production rose 0.7% in March. The factory component of that was a solid 1.1% gain on top of a 0.7% rise in February. That pretty much reverses the fairly steep fall that we saw in factory output back in January. There's still an annual pace of contraction. Annual industrial production is down 1.4% compared to March last year. That compares to a 3.1% pace of contraction back in January. So some evidence that the UK industrial sector is doing a little bit better. There was some support from utility output. It was very cold, I've got to say, in March. But as I say, the underlying factory component was still looking pretty solid. So some evidence that the UK industrial sector might be benefiting from the weaker pound and not suffering too much so far this year from weakness in Europe. The Bank of England left interest rates on hold, left their asset purchase program target unchanged at 375 billion sterling. And the very brief statement just mentioned that they have their regular press conference and an inflation report out next week. It was a holiday in parts of Europe for Ascension Day. The major markets are open, but even like in Germany, there were many businesses shut, so it was a fairly quiet day. European stocks were pretty much at a 5-year high yesterday, and they seem to have pulled back just a little bit today, but really just a pause, it seems, with no major drivers at play. So the London market just ahead of the close, up 0.1%. The French market down 0.8%. The Germans up 0.1%. Spain down a quarter, and the Italian market off 1.1% today. The Spanish bond auction went pretty well too. So we're seeing ongoing compression in peripheral bond yields in Europe. On the commodity markets, gold's off 0.6% at $1,464 an ounce. Oil's down 1.2%, $95.48 a barrel, and copper off 1.3% today. And the Aussie dollar's holding below 1.02 against the US dollar. It's at 1.019 at the moment. We've got the Reserve Bank's statement on monetary policy tomorrow. The jobs numbers were pretty strong in Australia yesterday, so we'll get further guidance from the RBA on the outlook for inflation, the outlook for the economy, and from that we'll make further judgments about the outlook for interest rates. Remember, our view is that we think that there's it's still likely that interest rates in Australia will be cut to as low as 2% over the next year from 2.75% currently. Okay, that's it from me for today. I'll be back again tomorrow.